Welcome to Trading the Close on this Wednesday. I'm Toni Valliere with Verified Investing. In today's top headlines, Treasury yields fall to the lowest levels in months. The U.S. economic growth rate is revised to 5.2%, showing stronger growth than first reported at 4.9%. And oil prices are rising ahead of OPEC's meeting tomorrow. Let's take a look now at where things stand just minutes ahead of the closing bell. We are seeing the S&P 500 down just slightly, down 4 points right now. The Dow down a little over 18 points. And the NASDAQ, this is up a little over 18 points. And the NASDAQ slightly down as well, just 23 points. So let's bring in Chief Market Strategist Gareth Soloway. What are the big takeaways from today? You said there's a lot to talk about.
Yeah, it's just interesting, the price action, right? So we got GDP numbers this morning that kind of gave a case that maybe the Fed is on the verge of no longer raising and even potentially cutting rates next year. We also got some inflation data that kind of signaled the same thing. And we even got Fed speeches. This week, there's like 20 Fed speeches. And so, yesterday we talked about there was one Fed speaker that was very dovish, meaning that they might cut rates. Today, one of the Fed speakers was a little bit more hawkish. And interestingly enough, if we take a look here, so this is the S&P 500. Take a look, and we can see this is actually real time. So we're still moving here on the candle. This is the 10-minute chart. What we're seeing here is we had a market that opened higher on that kind of weaker than expected economic news, which again, bad news is good news. That's what it is, right? For the markets, okay. Right? And so initially we were up pretty nicely, and it looked like the daily S&P was about to break out. And then what happened the rest of the day is we've had this market that is now sold off. And as you mentioned, the S&P is now slightly negative on the day. And so just flipping over to the daily chart, I mentioned that we were borderline a breakout level. Take a look at this, guys. So again, this is a trend line I've talked about in the game plan quite a bit. And if we zoom out, we can see where this line comes from. This comes all the way back from the all-time highs to the secondary pivot high here, and we were attacking it. We just kept on banging against it. And then today, we actually opened above the line, even pushed up a little bit, but have reversed back below. And so the bears, if you will, are making their last stand. They're trying to keep this market underneath this level and not allowing it to break out. And we'll have to watch and see what happens. But this is, for me, this is like my exciting sports event, right? This is the crazy action when you see this kind of battle being waged. It's pretty exciting for me, and it tells me a big thing. Like, if we close where we are, this is what we would call a reversal day. A reversal candle, and it's actually a bearish indicator for the market. So certainly does set up for some interesting stuff tomorrow with the PCE data and Friday Jerome Powell's speech.
That's coming out tomorrow. I got to ask you though, as someone who reads the charts, you're a day trader, is it exciting because it's more predictable for you, or it's a little more unpredictable?
So for day traders and swing traders, we want volatility. So like the last few days where the market's gone like this, I hate that. Like there's literally almost nothing to do. We sit out there in the trading floor and there's really no trades. Once you start to get this type of volatility, now there's some action to be had. Okay. And markets should behave in a semi-normal way, meaning that when you have a market that rallies this much in 1 month, it's supposed to pull back. Like, yes. It's like a rubber band. You pull it enough, it snaps back, right? And then, maybe it snaps only back here, and then it can go higher. But really, markets aren't supposed to just keep going and going and going for infinity, right? There's this check back. There's this selling. People are conditioned at a certain price to take profits, right? And so that's what you expect to happen. When it doesn't happen, it honestly drives me insane, because it's like, everything I know, everything I predict, it's not happening. And eventually, and today, what we're seeing here is that it's starting potentially to happen what I do expect to happen.
And I'm learning this because I'm taking your Winning Trader Series course, so I am following along. All right, let's talk about some of the big market movers today. GM, GameStop, Foot Locker, Dollar Tree. I read Dollar Tree attracting higher income shoppers lately. Not a surprise there.
Yeah, so why don't we start with GM, right? So GM gapping up. I know they had some good news. They kind of like revised numbers down, but then they said, hey, we're going to do a big buyback in sorts to really take a lot of shares out of play. Look at where this went to. And I know you're learning this stuff, so it's super cool. But like just looking at this area here, right? If we just look at the charts, where would GM as a rally? So it was up today coming into the open. Where would it stop? And the answer is, look at all these pivot points, right? And so what this is if we just draw a line and kind of connect the dots, Look at where GM stalled out right there. So this is just kind of the stuff that I love. Again, it's a passion of mine to be able to kind of look and say, okay, GE should stop out here. All of this chop is buyers and sellers. So, let's talk about the psychology of the market. So what ends up happening and why this is a level where price is having a hard time getting through is that there were literally millions of shares bought and sold here. There were a lot of people buying. And when they were buying, they were expecting price to go like this, right? That's when you're not buying if you're thinking it's going down, right?
Yeah.
So the problem is it didn't do that. All these buyers, it flushed on them. And they're like, oh, crap, my portfolio just got crushed. My position is down by 10, 15%. So what happens is when price goes back there, all of these people that bought, they're now back to break even. And they're like, whew,
Sure.
that was a scary trade. I bought and literally it fell on me right away. So they start selling. And that creates resistance. And that's why this type of trade happens where things stall out, at least for a certain time there. People are selling into that.
And there's that pattern that you're going to be looking for.
Yep.
Okay. Other market movers.
Oh, man, give me another one. What was it? Foot Locker? Foot Locker was another one? Let's take a look here. So see what Foot Locker did today. Foot Locker had a nice little move up. Let's see what we have on this one. So first thing I'm seeing, right, is you have this big gap right here, and then we went sideways all along here. Let's just see. So yeah, same kind of deal. So same kind of deal here as with GM. Big gap down, and then there were a lot of people buying in this range. And then we can see that's where it kind of stalled out right in that range as well. So again, good move on the chart, but you are into resistance. Now, the one thing I will say, there's a tendency for eventually gaps to get filled. So if eventually it can really push above this, this would be your upside target, which would be around $40. It's a pretty good upside move, potentially on a percentage basis. So very cool there. And then just to flip to a couple other charts here. Taking a look at the 10-year continues to break down. We're now at 4.267. I'm starting to think that this is getting a little overdone. I still think that ultimately yields probably come here. But I mean, look at how fast we've fallen from being above 5%. And at some point, yields are going to have to bounce. Like people are starting to get too far. Up here, people were like, oh, yields are going to go to 10%. And they were way too kind of lopsided. Now they're starting to get too lopsided to the downside, thinking everything's perfect. The Fed can cut like a ton come 2024. And so usually what ends up happening is, you have people here and you have people here. The reality is somewhere in the middle, right? That's what they say, like the truth. Your truth, my truth, it's probably somewhere in the middle, right?
Yeah.
And so that's the way it is with markets. So I do think we could come down a little bit more, but at some point you'll find support and you'll kind of snap back when people start to realize inflation's not vanishing totally. It's going to stay somewhat in the elevated range.
All right, PCE data will be released tomorrow. What do you expect from that?
Yeah, man, that's a tough one. So I do think it's going to show continued lessening on inflation. So a little bit of lighter kind of inflation, which the market generally will like. But this is the tricky thing about data. The market in their minds, in the general investor mind, already thinks that. So now, if we want a rally in the markets, right? So let's say here's where the market thinks inflation's coming in, right? And originally expectations were up here, but the market now says, oh, it's going to be less inflation. So they've lowered their expectations to lower inflation, which means for the market to go up, it has to come in under here. If it comes in here or equal, then the markets probably sell off. So down here, market's up here, market's down on that news. And again, the market essentially wants lower inflation because inflation is like handcuffs to the Fed. And if it's high, they can't do anything. They can't print money. They can't make money cheap again. The lower inflation comes, the Fed's free to do whatever they want.
Do we typically see the market react before this information comes out or not necessarily?
Not so much. Like you'll see a little chopping overnight, but sometimes it remains really quiet. And then everyone is just kind of waiting. And then that news hits and you'll see an immediate reaction tomorrow morning at 8:30. And I'll talk about it in my game plan at 9 o'clock.
I know you will. Anything else you've got on your plate for tomorrow?
Oh my goodness. Excuse me too. I think for the most part, the biggest thing for me now as a technician is to just watch the S&P 500 here, right? So let me flip back to the S&P. So we essentially did close close to the lows of the day. This, again, is a reversal candle. So in my world, this candle means a lot to me. And now to tomorrow, if this is true and this reversal is in play, we actually should get continuation follow through. If we get continuation follow through, I actually think you're in for a bigger sell-off in the markets back to, whoop, lost my thing, but basically back to 440, which would be a decent pullback on the charts. So again, we'd be looking at a level somewhere in, and again, it's not wanting to do lines, but either way, we can use this right here, and we'd be looking for a move down to here from this. But this candle, to me, that I know it doesn't look like much, but in the world... It
does in comparison to the ones right before it, that's for sure.
Right, and again, I think about the mentality of this. The bulls started the day being like, we rule right here. Everyone else, bears, go away, go back to your cave. By the end of the day, the bears took the field. They won this battle. And so now they have taken control. Can they continue control tomorrow and drive this market down?
We will find out. Gareth, thank you so much. And of course, you can watch Gareth navigate the charts in real time on his show, The Game Plan. That airs every weekday morning at 9 a.m., just ahead of the opening bell. We also have a new course that you should know about. It's called the Verified Real Estate Wealth System. It's hosted by real estate developer Greg Dickerson. Now, he's bought and sold over $250 million in real estate. He knows his stuff. And now he's teaching you how to master the art of real estate in this 3-series course. It is available now at verifiedinvesting.com. That does it for Trading the Close on this Wednesday. I'm Toni Valliere.
One of the things my dad taught me was hard work and discipline. He would teach me how to figure out a way to make the money that I needed for whatever I wanted in my life. I was climbing the corporate ladder, and I had a epiphany. Life is too short. I'm gonna do what I'm gonna do. I'm not gonna waste another minute. I decided I'm gonna carve my own path. That's why my life changed. That's why I got into real estate. But what fills me more than anything else is helping other people figure out why they were put on this planet. That's why I teach. That's why I coach, because nothing excites me more than seeing other people achieve their dreams. Other people carve their own paths. That was the freedom that I felt when I was able to leave that job and I was able to do whatever I wanted, anytime I wanted. Anybody can do it. Anybody can go out and do deals. Anybody can make money. Anybody can build companies. Once you're dialed in and you're settled in and you learn how to become that leader, delegate, or motivator, which is a lot of what I teach in that course, you can live a great lifestyle while building great businesses and doing a lot at investing and doing other things. When you go through a course like this, that gives you the power and the confidence and the freedom to go out there and take action and put that stuff into action. So for me, the one idea is all it takes to completely change the entire trajectory of your life.